Oh, I didn't see you there because you're still not journaling your trades, and that's why you're not a profitable trader just yet. What we're gonna do in today's video is cut all the bullshit. We're gonna go through exactly how you can journal your trades in the correct way. So if you stick all the way for the end, I've got a nice surprise for you. I'm gonna give you my trading journal completely for free. So don't forget to grab a notepad and pen and take this information on board, because if you don't apply it, mate,
you go to your job.
So that being said, sit back, relax, get a notepad and pen, and I'm gonna see you guys in a second. Sheesh. Bow. Look, there's no point me telling you exactly how I journal my trades just yet until you really grasp the power. You know, I was at a point in my trading career, you know, going back to 2017, where I was constantly blowing accounts, I was constantly losing trades, and I was just getting so frustrated because I was just sick and tired of being sick and tired. Right, I'll take a trade, I'll lose a trade. I'll take another trade, I'll lose a trade, and I had no clue why and what was going on. So ultimately, I was just stuck in a cycle. And that was until I realized that we humans, we're creatures of habits. We're never gonna do something just once, right? We're gonna do the same thing again and again and again and again. We can have bad habits that we're unconscious of, such as breaking our trading plan, such as not following our rules, such as over trading, over leveraging, not entering certain trades, missing trades we should take that we're just not taking. Again, there's a million different mistakes you can be making, but the thing is, because we're creatures of habit, and the first law of human nature is that we humans never do something once.
This is a major key alert.
And because we never do something once, you're prone to making these mistakes again and again and again without you even realizing, until you can take time to stop, pause, sit back and reflect on what's going on, then you can move forward. You know, Ray Dalio says it best: pain plus reflection is what equals progress. So if you're going through pain right now when you're trading, where you're losing trade after trade after trade, each week's failing, each month's failing, or maybe you're making a little bit of profit, but then you're giving it all back, it's simply because you need to go back and reevaluate what you're actually doing in the correct way. So unless you're aware of the issues you're facing, unless you're aware of the mistakes you're making, how are you going to improve? How are you going to know what not to change? How are you going to know, okay, I keep missing trades on a Monday, so I need to be more active on the Monday. Oh, I keep losing on a Thursday, so I'm going to stop trading on the Thursday. Until you can sit back and reflect and look at the mistakes and the habits you're making, only then will you be able to change. So what happens is when we're trading, we get stuck in the exact same cycles again and again and again and again. But here's the key. It's unconscious. So until we can be aware of the things we wasn't aware of before, only then can we start to change. How are we actually going to journal our trades? Well, firstly, there's two types of journaling. You have quantitative analysis and qualitative analysis. Well, Kieran, that's some big words. What is that? You know, truth be told, I probably can't even spell those words.
You stupid.
No, not.
But I want you to understand the difference. Quantitative analysis is actually looking at the raw, hard facts and figures of your data. For example, what's your accuracy rate on longs? What's your win rate on shorts? What is your profit percentage on a certain currency? What percentage do you make on certain days of the week? It's looking at the raw hard numbers. Now again, what we'll do in a minute, I will pull up my trading journal and I'll show you exactly how we track it and how we see this data when we get to the computer. But I want you to remember that's one type where you can look at your win rate, you can look at your average risk to rewards, you can see the raw numbers so that you can improve on them. For example, quantitative would be, okay, right, I win 30% of the trades on a Monday, but 70% of my trades on a Thursday. So now, knowing those numbers, you will start taking more trades on a Thursday because you know 70% of the time you win those trades on a Thursday. But qualitative analysis will be looking at, okay, so I lost this trade, but what actually happened in my mind before I won that trade? So qualitative analysis is looking a little bit deeper into it, looking into your mind and your thought process. Like, wait a minute, I lost this trade, but why did I lose this trade? Oh, maybe I didn't get enough sleep. Maybe I had an argument with my wife or my girlfriend, and now I was in an angry state of mind, and I wanted to get revenge from the market. Maybe you was on a losing streak, and you find that after 2 or 3 losses, you tend to take 4 more losses in a row, right? Again, qualitative is more in the thought process, and quantitative is more in the numbers. Before we actually dive into the journal, I want you guys to make sure you're journaling at the right time. Now, before I show you exactly what to do, what data to do, and how I use my journal, make sure you're journaling these trades at the right time. So as soon as you put that limit order in, right, I want you to go to the journal that I'm gonna provide. The link will be in the description, and I will show you how to use it in a second, but enter the entry, the stop loss, your take profits, your entry signal, your percent how much you risk. Put all that data in first. Take your before screenshots, and do that as soon as the limit order is set. So after the outcome of the trade, whether it's a stop loss or a take profit, the first thing I'm gonna judge myself on was that a good trade? And the metric of a good trade is not, is it a winner or did it hit stop loss? The metric is, did I follow my plan, right? I can hit stop loss, but as long as I followed my rules and I followed my plan, that is a great trade in my opinion. Because the whole purpose of trading is to follow your plan and manage risk, right? Making profits over time is a byproduct of being able to follow your plan. That's the first thing I'm gonna judge myself on.
This is a major key alert.
And what you can do is have a pen and paper to actually write down your thoughts, actually write down your emotions, actually write down what is your mindset going into this trade so you can log that qualitative data as well. As soon as you enter the trade into MetaTrader, put it in your spreadsheet. But when you review the trade, don't do it as soon as you have the outcome, because sometimes you need a little bit more chart data to actually, and price to continue moving so you can make a proper decision. Usually what I'll do is give myself at least 24 hours, so if I was annoyed or any emotions were present, I can calm myself down and I'll journal that trade accurately. Usually what I'll do is I'll write some brief comments at the day if there's anything on the top of my mind, and I'll come back at the end of the week to do a full-on end of week review to dive even more in detail into that setup and see exactly what happened. Was I out by a few pips? Did price hit my stop loss before moving? Or did I break my rules? Or what happened doing that end of week review? Okay, so here's the journal. This was given to me by an amazing friend of mine, so shout out to you, my guy. So the first thing you're gonna do is come down to the account transactions tab and simply just update the account balance you're using. Whatever it is, it's fine, just put it in here. From there, you've got the variable section, which you may want to edit some of the pairs that you're trading, some of the entry signals that you use, or if there's any other variables that you want to add. From there, it's very simple. You just come to the journal section and just fill it out. Now, this isn't my data. This is just pure random data I've been using for an example. So let's say the first thing you'll do is you put in the date you took the trade, right, from the drop-down menu. Let's say we took it yesterday and we closed it today. From there, you just put in the currency pair. Let's just say it was AJ and how much percent we risk. So let's just say we risked 0.125% and we were short. We then put our entry price. Let's just say we sold at £10. Our stop loss was £11 and our take profit was 1. It will then calculate the risk reward for you and you just put in the exit price. You then just put in if it was a win or a loss. You then input how much you won. So let's just say we won $3,000. It will then tell us how much profit that was. If you lost, you just put in like whatever you lost with a minus and it will obviously deduct that for you. And it will calculate it all at the end. You then put what your entry signal was. So let's just say it was a distro type 1. And so all that is the quantitative analysis, right? There's still some more. But here is where you do your qualitative analysis, right? Where, let's say, for example, you was in a good headspace, you traded well because you followed your rules, you meditated in the morning and you felt positive, little things like that, right? Any comments that you have from more of an emotional / qualitative standpoint that you want to input and that you want to write. That way you can see little commonalities. For example, you see, again, this is an example, but let's say after a few losses, you keep finding that in your qualitative analysis, you're trying to buy to a sell zone, or you had an argument and you're now angry, or you have bills to pay. So now you're over trading, taking too many trades and breaking your rules, right? All that qualitative analysis will show you here. From then, what you want to do is go to your session entry and put in what session it was. Let's just say it was a London session and it was pro trend. So again, this is more quantitative. All right, and then you can obviously put in the days of the week. So let's just say this was a Friday. All right, from then you put in the before screenshot. So you want to take a screenshot before you take the trade, after you take the trade, and then the point of interest you was using. And then finally, you want to go and create a case study. A case study, guys, that's too much to go into in today's video. If you do want me to break down how I do my case studies for trades, let me know in the comment section down below, like you did for the last video, and I will definitely provide it for you. But now once all that's done, what you want to do is not make any changes just yet until you've got at least 20 trades in your sample size. Because once you've got enough data, here's where you can really start to look at your performance. You wouldn't flip a coin once and it lands on heads and then you say the coin is 100% heads. No, right? You need to flip it a few times, get enough sample size so you can see the actual statistics. So what you want to do now is come down to your chart data tab where you can see all the data. right? Profit and loss by month, end of month equity, profit and loss by currency pair, strategy, trend, day of the week, and by session. So what you can now do is use this data after you've got a certain amount in your sample size to now figure out what you're going to change or keep the same moving forward. For example, let's just say we completed 20 trades and we found that, okay, we lost majority of our trades during Asia session and we lost the majority of them on the Monday. I like to change one thing at a time to really test it. So what I'll do is say, well, clearly, right, the Asia session lost me 2%, rather Monday only lost 1.8. So I'll now do a new trading plan, which will be the exact same criteria. It's just now I'm not going to trade Asian session. Then what we do now is say, okay, all right, I do another 20 trades, do another journal, input in the same journal, compare the data. Because when you come to the overview section down here, it will tell you all your statistics. So let's just say your total profit and loss with system 1 before you changed it was 4%. And then you now alter something and your new data tells you made 7%. Well, clearly now the new one is better. And vice versa, right? If something you change gives you a worse return on investment, you know the exact thing you changed, so you can now go back and alter that thing. If you're more of like a visual learner, you can view the actual charts here. You may just have to zoom out. It will show you like, okay, days of the week, you're profitable, basically just everything on the chart data side, just in physical bar graphs as well. And then you've got a final tab for your daily equity as well, where you can see what days, how much you made on certain dates and how much you lost, etc. So now there's one more thing I want you guys to know about journaling that's really going to take you to that next level. And for those who stayed around, this is the real secret. A journal is great, right? But the thing is, you're limited by yourself and your experiences and your eye. I remember there were so many times in my trading journey where I lost trades and looked into my journal, but I didn't actually know what was going on or why I lost a trade. So having a mentor and someone who's a lot more experienced than me to sit down and break things down for me and say, look, Kieran, you missed this out, or Kieran, you did this, or Kieran, this trade doesn't even meet your criteria, what are you doing? Is what really took me to that next level. Now, I know some of you guys may not have access to a mentor or may not actually have that. I mean, that is why I did design my mentorship program. So if you're looking for that extra support, you can send me a message and I'll do my best to help you out based on your scenario. With that being said, guys, that concludes today's video. If you did get value, drop in the comment box one thing you liked, one thing you learned, and let me know what else you want to see next. But with that being said, I'll see you guys at the top, from the top, because you already know that bottom's way too crowded. Sheesh.